We started a revolution to bring this independent spirit to banking.
The promise of the People's Bank. But after 22 years, the big four Aussies still dominate.
Last year, banks' profits were $7.18 billion after tax, up $1 billion on the year before.
Now there are moves to break up what the Finance Minister describes as
a cosy pillow fight.
Kiwibank CEO Steve Jurkovich is up for it.
I think it'll be a bit niggly, won't it?
But could that mean Kiwibank is no longer totally owned by Kiwi? Welcome to the Back in Business podcast. I'm your host, Simon Shepherd. Kiwi, making Kiwi better off.
This was us 20 years ago. A small team with a big idea and an even bigger purpose. Create a bank that keeps 100% of its profits in Aotearoa and makes Kiwi better off.
That is the purpose of Kiwibank. Yet the big four Aussie banks, Westpac, ANZ, ASB and BNZ, have more than 80% market share.
We are not getting a good deal from the big banks. Today, I joined the Commerce Commission in calling out the market behaviour of New Zealand's big four banks. Competition between them resembles a cosy pillow fight.
The message from the government couldn't really be any clearer. So in this episode, we talk to the man charged with being Chief Disruptor, Kiwibank CEO Steve Jurkovich. So the Finance Minister, right, describes competition amongst the big four banks as a cosy pillow fight. How would you describe it?
Yeah, look, I've worked for Aussie-owned subsidiaries in New Zealand. I've never felt like it was like that, but I can understand the point that's being made, which is, everyone makes very good returns. Market shares don't move that massively. So I think that's the point being made. But I think, day-to-day bankers out there, mortgage brokers will be fighting for deals. So there is competition at that level. I think the bigger idea is there someone really making a big difference?
It's been described as an oligopoly.
Yeah,
I think that?
85% of the banking market's held by four players.
So yeah, that's the definition of an oligopoly. Yeah, great with that. Okay, do those big banks use any tactics to try and stop Kiwibank from gaining market share? I mean, anything in particular targeted at Kiwibank?
No, I haven't seen that. I mean, they're competitive for the deals that they want to win, but I've never seen a sort of concentrated, hey, let's have a crack at a particular bank. There's probably once in my career when ANZ and National Bank came together that the bank sort of focused on, would National Bank customers be disenfranchised? But that's about the last time I saw someone really put a concentrated effort on one particular brand. Right,
so the competition that you see from the big four is just, straight competition, there's nothing tactical about it against Kiwibank?
No, I don't think so. But I think the market share growth that we've had in the last 3-4 years has definitely meant that I think in boardrooms at the Aussie subsidiary banks, they'll be looking around going, that green one's annoying and how much it's growing. So I think that's true.
Right.
Whereas I think, when you take 20% of the refinances in the market for home loans, every bank will be sitting around looking around saying, hey, that's quite a shift. Maybe we should do something about that. And, maybe they see that in tactical pricing sometimes, but no, not a concentrated effort.
You've been in those boardrooms or you've been in those management offices of like ASB and Westpac. So what are they going to be saying to each other now that the Commerce Commission is saying we anoint Kiwibank as the disruptor?
I think it'll be a bit niggly, won't it? I always get teased a little bit about, because I'll always say, we're the smallest, you don't need to worry about us. And that conversation's changed over time. And I remember being, at previous place where colleagues would also say, hey, we used to say about Kiwibank, it's only 1%, it's only 2%, it's only 5%. And once it went over 5%, people started to say, actually, hey, hold on, something's happening here. So I think, our latest results and probably the string of the last 5 years of results, if you think about, we were $20 billion in assets when I started, we're nearly 37 billion now, that's sort of circa 80% growth. No other bank's growing like that. But the point is, man, we've got so far to go to where, the next biggest.
Right, and this is where the Commerce Commission says it wants you to be the disruptor. But Kiwibank, in an earlier briefing to the government this year, said it wanted to be a competitive alternative. They don't sound the same. Which one are you more comfortable with?
Look, I think we probably meant the same thing in a way. I mean, I couldn't style what the commentary was, the sort of maverick commentary and all that sort of stuff. Actually, that's interesting, but actually the real difference we're trying to make is be the customer's first choice. And we're trying to do that through being different to other banks, really strongly focused on our purpose of Kiwi making Kiwi better off, not taking every cent off the table on every deal. And so, try and get fair returns, but also understand that our business is best if it keeps on growing.
So how much money does Kiwibank need to disrupt that cosy pillow fight?
Look, I think $500 million, $500 million would make a really big difference over the next 5 years. What you really want is continuity of capital rather than one big chunk of it. So $1 billion or $2 billion actually isn't that useful for us because it drives down returns. So if
So how does that work? I mean, if somebody says, here's $2 billion to be the disruptor, and you say, no, thank you.
Yeah, well, you've got to sit on the cash, right? Because you've got to put it to work. So it'd be like any of your businesses sitting around where you've got cash that you aren't able to invest and put to work. Your returns will only be what the cash rate is versus, if you deploy that into banking assets, you could get twice that return. So that sort of makes sense, which is, if you want to double over 5 years, you just want to make sure that you've always got a pathway where you can just keep on growing, because the worst thing you can ever do is sort of grow fast for the next couple of years and then come back and say, oh, Simon, sorry, we're going to have to turn the tap back a bit. That's the worst thing you can do in a bank.
Right, okay, you want stable pathway. You've had a go at this before, right? $225 million recently was put into Kiwibank after the sale of the Kiwi Wealth Group. So $225 million, what did you do with that?
Well, we grew, 3 times the market during that period over the last couple of years. So I think we've proven to ourselves and to others that over the last 5 years anyway, we've been able to grow really strongly. If you think about COVID and a whole lot of stuff during that time, we've actually outperformed the market every single half year over that time period. So I think if we get the money, we can show that we can put it to work nicely.
So market share is 7.6%, and you want to double that.
Yeah, I think
what
we
time
can.
frame?
I think over 5 years is really realistic. If we think about that period that I've been in the role, which is the one I know the best, 2018 we were $20 billion in assets. Now we're 36.6. We've had COVID during that time, and people didn't borrow as much, and the economy's been a bit tougher. But if you think about that same story, I don't see why we couldn't be $80 billion in 5 years' time.
$80 billion in 5 years' time. Kiwibank also owns the brokerage firm, I guess, called New Zealand Home Loans, that's right. So New Zealand Home Loans is out there selling home loans, and yet you have decided to partner with more brokers. I understand you've been partnering with like 1,000 now. So does that mean you don't need New Zealand Home Loans anymore?
No, I mean, it's a bit of a false dilemma to say you have to choose between them, because about a third of the loans we do come from New Zealand Home Loans, and so they're a treasured partner, and we love them as a sister company. But also there's a big market out there where nearly 65% of New Zealand home loans come through a broker. So we needed to broaden our reach and get in front of those, get on the shopping list of those customers that don't go to New Zealand Home Loans. New Zealand Home Loans are quite specific what they do. They're very good at debt consolidation. They're very good at accelerated repayment.
Then would you go to your owner and say, why don't you sell New Zealand Home Loans and give us the cash?
Look, that's not our call, of course, but the most important thing is that those customers that want that offering from New Zealand Home Loans get support. Look, they provide a huge amount of the business that we do, and so continuity of that relationship is critically important. So, from my perspective, making sure we do the best job we can for New Zealand Home Loans, regardless of whether a sister company, is critical for us.
Right, so I'm just trying to work out where the capital might come from. But look, I know it's not your decision, but do you care where the capital comes from to make Kiwibank a disruptor?
Yeah, I do. And I think, when I have spoken in the media about do I feel really passionately about it has to be 100% New Zealand owned? Look, no, I don't, because I think that limits your options. Does that mean I prefer it to be spread, in all sorts of different ways? No, I don't. I think what's important is the Minister has said all options on the table. That gives us the best chance to find an owner who's aligned to what we want to do and how we want to do it. And so that's really important. And I think, I've been in this role when we've had New Zealand Post, ACC and Supras owners. I've been in this role when the Crown is owned 100%, and maybe I'm going to be in this role when there's a different owner, part owner involved as well. And actually it hasn't changed the way we do things.
Ownership of Kiwibank has been a contentious political football. New Zealand Post was the first owner, and it wasn't for sale. Here's John Key during the 2008 election.
We won't be cutting essential services, we'll be growing them, and we won't be selling Kiwibank either.
But then other Crown shareholders were brought in, like the New Zealand Super Fund and ACC, and the Green Party didn't like it.
And it really increases the chances that Kiwibank will be privatised.
The government did take back full ownership 2 years ago, but now that may change, and so too could the stance of the CEO. This is him talking to me when he first got the job.
We've got owners that are aligned to the long term. They're thinking about, what's their commitment for the next 10, 20, 30, 50 years.
When you first took the job in 2018, and this is what you told me at the time, you were pleased that the owners were NZ Post, super fund. They had a long-term philosophy that was in the best interest of Kiwis. So are you changing your philosophy? Are you changing your thinking about that? Because, new capital could mean different kind of ownership, not necessarily a New Zealand institution.
It could do. I mean, if you're an investor that wants to maximise return in the very short term or looking for aggressive dividend flow, then you'll get a different type of owner.
Yeah.
But if you believe that the biggest driver of enterprise value for a bank is growing over, the medium term, then actually I think it's just really logical investment. And I think you've seen some of the KiwiSaver funds even talk about that, which is actually the long-term value play, because they have long-term investment horizons, just like ACC and Super and others do, is actually what's important is how much this thing is worth in 20 years or 30 years or 40 years, not, a dividend to ACC or a KiwiSaver fund, if they're a decent sized fund, is actually not really going to make much difference.
So does that thinking sort of rule out overseas investors like tech companies or an overseas pension fund or even maybe an overseas bank?
No, I don't think so, because when they think about their investments, and you see some of the, the Canadian pension funds and those sorts of things, they often invest in long-term assets that they, the value is going to be in 20, 30 years because they've got an investment burden that's longer term. So I think there'll be some investors that say actually, hey, if we're PE and we want to flip this thing in private equity, in 3-4 years, it's probably not the investment for them. But if they're looking for a really strong dividend flow, they probably look at us and think, well, actually, why would we pay a dividend if we've got an opportunity to grow? So as long as that's consistent, I think people understand that.
Is there any possibility in your mind that an overseas bank could take a share?
Yeah, I think there is. I mean, why would you do that? I think you might want to get into a market that's a bit smaller where you want to try different things. So, maybe that's a play. I think that's true of the tech companies as well. Apple, I used to use Apple as an example.
Yeah.
They've...
Not that they're knocking on the door.
No, exactly right. But, they are sitting on something, $250 billion worth of cash, right?
That's right.
So if they really wanted to get into a market and try financial services, maybe it's logical that you come to New Zealand, which has got all the same rules as the rest of the world. You can try some things out and, if it works without too much risk. Now, I think they also make, a lot of money doing what they're doing, and so their next most attractive thing may not be banking. So.
Okay. If something like that eventuated, would Kiwibank lose some of its social licence? Would it lose some of the loyalty that it has from Kiwis? Yeah,
I just think one of the things I've realised in this job is actually you don't want to think about it as social licence as being a trade-off with profit. Actually, really strong social licence or B Corp or having a really strong purpose actually drives your performance. And for customers that want to see that there's a difference being made and the choices that you make are a bit different, that's the attractive thing. And so I believe that we drive performance through purpose and taking a longer term view versus trading it off.
Because your purpose, right, the wording of your purpose that you just mentioned is, Kiwi making Kiwi better off. Doesn't really work if it's mostly Kiwi making Kiwi better off, does it?
Yeah, well, I mean, it's a little bit of a change, isn't it? Because every New Zealander through the Crown owns us now.
Yeah.
The question mark is, do you want to own it more directly? I think that works. And so, I think it doesn't have to be a trade-off. And I still think that the idea that a bank is about trying to make its customers better off rather than its shareholders better off is still a really powerful idea.
When you say own it more directly, you're talking about a float on the share market?
Something like that, or through your superannuation fund or
your KiwiSaver.
Yeah, that KiwiSaver along those lines.
I know you've got record profits, best ever, 202 million, and you've talked about your 5-year growth. Yet your return on assets is half that of the big four. So does that mean you're not financially fit enough to be able to be up for the challenge? I mean, can you explain to me what that means?
Yeah, I mean, a couple of three things. One is we've invested more in our tech platform than we ever have before. And so if you think about when I first came into the job, we were spending about $80 million on projects and change and initiative. We're spending more than $200 million now. So we're investing, circa $110 million a year more in getting to the future. So, new core, new operating platform, operating in the cloud, new data capabilities, new app capabilities, all those sorts of things. Every bank is doing those things, but we're doing it faster than we ever have. The second part of it is when you think about the returns, because we don't do institutional banking and some of the really large end of town, that's where the real relative returns drive, because You know, if I use the example of a large institutional customer maybe returning the bank $2 or $3 million, the actual incremental cost for having 2 of those customers or 3 of those customers or 4 customers is only one banker. So that really does drive the returns. Now, when things don't go so well for you, they can also push down returns, but that's the real difference, which is the business mix. So bigger customers make a big difference, and that's what drives the returns.
So that leads us on to where is the opportunity? So say you get $500 million from somewhere. Where is the opportunity to be the disruptor the most?
I think business banking is the single biggest opportunity for us. That small, medium business, which is the vast majority of the New Zealand economy. Yeah. I think we wouldn't want to trade off our growth in home loans, but I think there's a really good opportunity to grow there, and we can continue to grow. But the really big difference we can do and change the mix of our businesses in business banking. Business banking,
38,000, I think, businesses bank with you at the moment.
Yep.
Do you have a target for what you'd like to see?
Yeah, I mean, I always think about why wouldn't you try and double things over 5 years? And so I think, the mix of customers, we can grow more into the more medium-sized customers. What we find when we talk to those customers, Simon, is that they often say, look, if you had everything that we need, we'd much rather bank with a New Zealand bank. So there is a feeling about a New Zealand business doing business with a New Zealand business, and I think that's something we can just continue to grow.
Right. I mean, that's a loyalty, and that's not hard and fast cash. No. You've got to have the products to back that up, haven't you?
Yeah.
Are you confident that you will have those kinds of products if you get this kind of capital?
Yeah, I do, and I'm even more emboldened by the idea, because when I think about the legacy and the heritage systems the big banks have, what we are moving to is going to be way faster and way more adaptable, and because we are smaller, we're going to get there faster.
Let's go back to Jim Anderton. So Jim Anderton was the MP who had the vision for Kiwibank, but also his vision was, People's Bank. Yeah. But is it ever going to be a stage where the People's Bank is going to end up being big enough to be the government's bank, or, as you say, an institutional bank?
Yeah. Look, I think it's quite a way off, partly because the sort of things that you need to invest in and the sort of returns you have to be prepared to accept are quite hard going. And so, I just think it's logical that we focus on the fact that, we could offer some things to the government, but actually institutional banking has got, 30 odd banks in New Zealand competing in that market. I don't think we make Kiwi better off by being the 35th or the 36th, whatever we would be. Yeah. Likewise in agri, I think there's 4 big banks plus 1 global player who support, that backbone of the agri economy. I don't think having a 6th smaller bank join it really makes much difference.
Agriculture's out then, okay. What about buying another smaller bank to get bigger?
Yeah.
How about TSB?
Yeah. Look, there's so many people talk about, the consolidation of the smaller banks. I think, the capital rules have made it difficult for smaller banks because we don't have the option to ring our friends in Melbourne and Sydney and say, hey, can we, hold on to some of that capital? Can you shoot some across? But I wouldn't comment on, whether we roll up another bank or not, Simon.
Above your pay grade.
Yeah, very much so.
Speaking of ownership, the finance minister, right? So she's gathering advice by the end of the year. Do you get to outline your favourite options?
Yeah, we do. I think I describe them as the most logical ones and the ones that are most aligned to the strategy. So, we believe that, keeping going on leveraging the B Corp accreditation, being purpose-driven, focusing on, everyday banking, small business, medium business and home loans, that's the sort of alignment that we're after because we think that's the biggest opportunity. So it's logical, I think, that she would ask, but ultimately, she is the owner on behalf of the Crown, and so it will be her call.
And she comes up with a plan and says, this is what I want, gives you a letter of intention.
Yep.
How soon can you get it together?
Well, I think we could do it in months. And if I think about when Super and Post and ACC sold, from triggering the situation to closing was about 4 months. So I think, less than half a year and we could be really rolling.
Less than half a year. There is a problem with that though, isn't there? I think it's called the election. And if there is a process where some of Kiwibank gets floated, the people apparently have to be asked.
Yeah, and I think she's pretty clear about that, which is she'd want a mandate from the election. I think the other thing to bear in mind
so
is...
that's 2026.
Yeah, that's right.
That pushes it back.
Yeah, it does. But I also think, the capital need and the opportunity aren't so pressing that you need to float in the next 12, 24 months. The biggest opportunity, I think, is, maybe there's a cornerstone investor who steps in first, and then you take it to the election around a mandate, and then you get that mandate or you don't, and decisions get made.
Right. So first key hurdle is a cornerstone investor.
I think that's the logical order.
Okay. So You've been here 6 years.
Yep, I have.
Are you? You're obviously happy with the way things have gone.
Yeah, I am. Yeah, look, I'm really proud of the team and I'm proud of who we are now and the difference that we make. But I still feel like we're just really getting started. There's so much opportunity.
So, are you going to stick around and be the disruptor over the next 6 years?
That's my plan.
That's your plan?
I do realise that might be up to someone else whether I'm here or not, but certainly my view is I love the opportunity and I love the difference that we can make.
And that wraps up this episode of NBR's Back in Business. All the audio clips used can be found in the description. For more comprehensive and breaking business news, head to nbr.co.nz. Thanks to content producer Jake Latham and creative producer Michael Hickmont. Our next episode looks at how some businesses are planning to opt out of soaring electricity costs. I'm Simon Shepherd. We'll catch you then.